I'm Mark Storey. I'm the president of Practice Real Estate Group for Central Texas markets. So in leasing retail right now, you're seeing an extraordinary amount of activity. The current market is 97% occupied here in the Austin area and surrounding communities, meaning there's only 3% of vacancy. So there's not a ton of available space in the market, and it's more difficult to find the correct space in the market, specifically because there's just not a lot of it. The good part is when you do have a 97% occupancy rate in retail, you do have many developers looking to capture more opportunities. So there are projects being developed now and will be developed in the next 18 to 24 months that will present great opportunities for clients. Because the occupancy is so high, one of the things I would advise clients to do right now is to start their real estate search early, with the anticipation that they're opening 12 to 18 months from now, maybe even a little bit longer. Because what you're seeing is once you have that high occupancy rate, more developers are going to take more chances in the market to develop opportunities to capture the growth in different areas overall. So keep an eye, or start early and keep an eye on the market. And when the right opportunity presents itself, even if it is 12, 15, 18 months down the road that it's going to be delivered, that's your opportunity to capture it first. A lot of your competitors will be looking at the same opportunities that you're looking at, and starting earlier will help you be the first one in line to find the right opportunity and pursue it, so you can open your second location or third location, or even your first if you're looking to do a startup in the market. I would say right now is not the best time to purchase a building. And the reason I say that is we're at the high end of the market. Interest rates are a full 2 to 4 points higher than they were even 2 years ago. So right now you'll be purchasing at the high end of the market, and the likelihood that you see as much appreciation as you would like to over the life of owning that property is not going to probably produce the returns you would like to see. Now, that being said, the Austin market has continued to go up even through the 2008 recession and any other kind of dips in the market. We haven't seen the Austin real estate market drop significantly, or even just a little bit for that matter. So the idea that the market will continue to go up is strong. Obviously, there are major factors of a full recession or something worse happening that can affect the market overall, where you will see the prices drop. So I would suggest waiting somewhere around 6 to 8 months to see what the Fed is going to do in regards to interest rates. And if those start to come down, that may be the better time to purchase. Even if you are purchasing at the higher end of the market, at least over the life of the loan, you're not going to be paying more for that same piece of property that you would right now. So what I would advise right now for clients to do is anticipation of interest rates dropping. Is save capital. If you have the ability to put more money in your bank accounts, you can put it in investment vehicles as well, but make sure it's easily accessible and not going to be penalized through taxes. Put it in an investment account, but if nothing else, save your capital with the idea that when interest rates do start to drop, you have the capital for a down payment, and it allows you to buy something that really fits for your overall goals and dreams and visions for your practice. I think expansions and second locations are a great opportunity. If your practice is tapped out, you can't add any more operatories, there's no way to add additional revenue to the current practice that you have, looking at a second location is a great opportunity to continue to expand the business and add more revenues to your overall bottom line. Again, you are at the higher end of the market, so you will be paying for that space, but if you have a proven track record of a practice that's done very well, there's no reason to believe that you can't replicate it. There are some things that you need to keep in mind once you go to a second location, and if you're the face of the first practice, it is a little bit more difficult. to open the second location and continue the same run, or to keep your first practice at the same levels that it's at if you're going to be focusing more so on the second practice. So there are things you need to keep in mind, but if your current practice doesn't have the ability to add more revenue to it, a second location is a fantastic option to consider. I have a few clients who are looking to do second locations. They have done very well at their first location. Their goal is to create more of a conglomerate or a corporate group where they have the opportunity to expand to new locations. Just the overall growth in Austin and the market opportunity is there, and a lot of the savvy business owners are looking to capture those additional opportunities in the market. 2024 is looking to be a very good year. I would say it's one of the fastest starts to a year that we've seen in the real estate market in quite some time. There was a lot of holdback last year, and tenants getting used to the higher interest rates and the changes in the overall market. Now that we're seeing the Fed suggesting that they're going to drop interest rates, which in turn will make loans over the lifespan of the loan, it'll make it more affordable. We're seeing not only a comfort with the interest rates and where they are right now, but with the prediction that those interest rates are going to come down, we're seeing a lot more activity. So again, my advice to you is start your search early with the anticipation that you're going to be open in 12 to 18 months and can find the right opportunity that presents the right demographic base, the right competition analysis, and the opportunity for success for your practice, and take advantage of the market when it becomes a little bit better for yourself. In regards to starting early, it makes sense to always have a business plan and project what your vision is and what you're trying to accomplish with your practice, whether that be an expansion, whether that be a second location. Always have a plan in place and an overall vision to accomplish those goals. I highly suggest talking to your CPA, your bankers, your real estate agents to get a feel for what's being offered in the market, what your opportunities are, and how you can take advantage of those opportunities. And have a good representative on the real estate side who can show you properties or potential opportunities that may be further down the road, but you can jump on those first before anybody else has that opportunity to do it. Right now, again, because the occupancy rate is so high, speed to market and finding the right opportunity is going to be key, because there's less and less options out there for you. So staying on top of the market, taking advantage of the opportunities, and quickly moving on something that does present the right opportunity is what I would suggest for most people.